Morning to those that have joined us already. We're thrilled that you've joined us for our first Texas Real Estate Town Hall. My name is Tiffany Stillwell, and I am the VP of Marketing at Patten Title. So just want to quickly go over the agenda this morning. We're going to try to be real respectful at staying at 1 hour. Some housekeeping issues, and I might repeat these again in a couple minutes as more people join. But as you all know, more people are working from home, and so more people are doing web meetings. And so there can be connectivity issues. And so just a few tips to try to alleviate that. It could be the server for Zoom, but it also could be that you have a next door neighbor who has a bunch of people streaming movies and things right now. So the best thing you can do is close all of your browser windows and any applications you're not using, and that will assist with better connectivity. So let's see, and the agenda for this morning is I'm gonna introduce all the speakers here in just a minute, the panels, and then we will take questions for about 40 minutes. There should be an area down below for you to ask a question, and we do have some of my staff monitoring that, and they will send those to me. I don't know if we'll be able to get to all of them. We will, after the event, send out an email with the transcript and video link to the recording of this event, and we will try to answer some more questions potentially in that. But you can ask a question below. The goal of this town hall is, obviously we're in a very unique time now, but business is carrying on with real estate, and more than ever, those of us in this industry, realtors, lenders, title, we need to work together to get to the finish line successfully, and we need to definitely have that solidarity. And so that's really the main purpose, is to share information and have a forum for you to be able to ask questions to some experts in their industries and some thought leaders. And so with that, I am thrilled to introduce, and I want to thank my panelists for joining me this morning. First, we've got Ron Zach, and Ron is the owner and CEO and president of NRL Mortgage. His career in the mortgage industry started in 2001, and he was on the front lines for a national lender. NRL Mortgage capitalized on Ron's skills to help expand their team, and in his first year at NRL, he grew the company from 4 branches to almost 20, tripling the volume. As president and CEO, he believes in taking care of clients and getting the deal done. Ron's vision is to grow NRL into one of the top mortgage companies in the country. In 2015, he received the Top 40 Under 40 Rising Star Award from Housing Wire, which is a great source for information right now, by the way, that Housing Wire. He's a Houston native and left for a short while to go to UT here in Austin with a degree in economics. He's back in Houston now, and he lives with his wife and their 3 children. Our other Houston expert panelist is Chris Sears. Welcome, Chris. Chris is the owner of the Sears Group. He is CEO and team leader of a $1.6 billion sales volume producing brokerage. He is a trainer, business coach, and consultant to 4 of the top 10 brokerages in the Houston MSA. And most recently, president and CEO of the 4th largest real estate brokerage in Houston. Thanks for being here, Chris. Max Leaman in Austin, Texas is with LoanPeople. LoanPeople, he is CEO and owner. LoanPeople is a company built by a loan officer for a loan officer to provide customers a 5-star experience on every loan. Since 2001, Max has helped more than 8,000 customers fund more than $2 billion in loan volume. In years 2016 and 2019, his annual production exceeded 300 million. 2019, Scotsman Guide magazine, Mortgage Executive magazine, and National Mortgage News ranked him the #1 Texas loan originator and top 10 nationally across all states. He continues to work as a producing loan officer, which I can attest to. He answers his phone and emails very quickly, serving employees, clients, builders, and real estate partners. LoanPeople offers originators the strategies, technology, and marketing systems that made Leaman team a success. Romeo Manzanilla. Welcome, Romeo, and thanks for being here. He is the broker in charge of Realty Austin, which has 560 agents, 60 plus in the Austin market. And he's also the current president of the Austin Board of Realtors. Manzanilla is active on the legislative management team and at the state level participates on the Texas Realtors Professional Standards Committee and is a Texas Realtors mediator. He has been a Realtor member of ABOR since 2006 and has earned his short sales and foreclosure resource SFR designation and also the CDRS, ASP, and Texas Realtor Leadership Program and Broker designation. So Romeo is going to bring us two different perspectives, that of the broker and that of the ABOR president. And last but not least is my colleague, Eric Fontanot, president of Patten Title Company. Eric is based in our headquarters in Houston. He's a graduate of the University of Houston. Started out as a loan officer, but quickly pivoted to the title industry in December 2004. He managed an upstart fee attorney operation, and then he came over to Patten as a fee office. And in the last year, took us from a fee office to a full-fledged title agency. He has expanded the operations throughout Texas, and we've had double-digit growth from 2011 through 2015. So welcome, panelists. Thank you for being here.
Thank you.
Thanks for having me.
Thank you.
All right, I'm going to jump in with these questions. First one, and this one is for everyone. Realtors, lenders, and title companies must work together successfully for real estate transactions to close. What would you say is most important for your clients and colleagues to know during this unique time to get to that closing successfully? I'm going to start with you, Max.
I think that really everybody just needs to communicate and work together, especially with all the shelter in place and people being furloughed or job loss. Borrowers need to really communicate that up front to loan officers. Loan officers need to be asking those questions up front. How has all of this impacted employment, income? Because that's going to affect qualifying. It's going to affect closing. So we all really just need to keep open lines of communication and not try to hide anything from anybody, because it generally all comes out.
Good. Chris?
Yeah, I think the one thing that we need to help communicate to our clients is they don't need to succumb to fear. There's ways to handle this crisis and ways to operate within the confines of social distancing, 6-foot rules, et cetera, financial struggles. This is what we were made for. We're mortgage, title, and brokerage have always, my entire career, worked as a team to get people across the finish line. This time is no different. The only difference is that we need to, like Max said, be over communicative. We need to utilize things like Zoom, things like social media, things like our texts to make sure that the clients don't succumb to fear.
I agree. Great. Ron?
Really the same thing. I mean, I think the communication is more important than ever. Being upfront with the client up early in the process, more than we ever have. Making sure they understand, even if it's, do we think you may get furloughed? Do you think there's a layoff? There's every little piece of this, because then it's, 20 or 30 days. Is your wife going to be comfortable with an appraiser coming to your house if an appraiser, has to be done or an appraisal has to be done? I just think the communication, obviously, I think, the first two panelists said the same thing, but it's even more than ever. It's more clarity than ever. We need to really be as transparent as possible and as open as possible to really know what we're diving into before they do, appraisals or closings or title or whatever it may be.
Thank you. Romeo?
I think the biggest thing is just understanding it's not business as usual, right? There's no norm anymore. So not taking things for granted, whereas, before you could pretty much bank on, let's say, your, mortgage professional being able to close this in so many number of days, and and this is what you need to qualify. I mean, you can't take any of that for granted now. So the communication, like everybody's mentioned, is really, really key. And you have to, it may seem a little bit repetitive, but you have to stay on top of that, because it's all about setting those expectations with those clients and going through in a much more detailed capacity what the process is. Because as was mentioned before, if you're a seller, you may have an appraiser come in, an inspector come in, you may have, different people coming into the home. So you have to set that expectation and make sure that all parties are comfortable, and also set the expectation. What if something does happen? What if, we're in a situation where we are quarantined, or let's say you are depending on the sale of this property to buy this other ones? What's your plan B as well? So, you don't want to be doom and gloom, but I think you have to be a realist.
Great. Eric.
Yeah, well, I think all these guys are really smart and they know exactly what they're talking about. It is absolutely about communication and expectations. This is an opportunity more so than ever, I think, also for us to step forward and be really solutions oriented, finding new innovative ways to continue pushing the process forward. And I think that we as an industry have done a really good job of doing that. But the other thing that we need to embrace and really take over is this is an opportunity to educate. It's an opportunity to educate all of our consumers, Mr. and Ms. Jones, on that are buying or selling a home, or somebody who's refinancing, as to the changes that are going on. So it's incumbent upon all of us to continue to be ahead of the curve and staying abreast of what's happening with new legislation as it comes in. And then it's our responsibility to continue to communicate that back to our customers and clients so that their expectations can be set. So piggybacking on the communication and the expectations, and then us, it's incredibly important for us to maintain and keep incredibly informed.
Thank you. Okay, next question. So February, I just read, was a 13-year high for home sales. So obviously that changed pretty quickly. So are people still buying and selling homes in your market and doing loan applications? Did the valve shut off abruptly in your market, or update us on what's happening in your market and with your business? Romeo, let's start with you.
I think there's been so much pent-up demand here in the Austin area. Prior to everything happening, I mean, we were running, at about 1.6 months of inventory. So there was a lot of pent-up demand. And then of course, you factor in that the very, very low mortgage rates. So there is definitely a slowdown in the number of people that are buying, obviously, for safety reasons, and rightly so. But I think there's a lot of buyers who traditionally were losing out in multiple offer situations, that for them, all of a sudden they're finding that they're not having to compete with as many buyers out there. So if a buyer is looking in a specific neighborhood area, knows the details about that, and a home comes on the market, even if they are very cautious and are going to do everything virtually, a lot of buyers are making the purchase or offering, because knowing that they're not competing with as many buyers. So, I think in general, I mean, we're definitely seeing a slowdown, and we are seeing a lot longer escrow periods as well, because appraisers are having a hard time getting in. Inspectors are also, and because all these different industries, third parties, have their own policies in place, and some of them have chosen to put a pause on their business as well. But I think we're still going to see an active market. It's not going to be where we were last year. It is going to, we are going to see some inventory not come on the market because sellers are waiting to put their home on the market because they themselves don't know what their status is going to be with their job. But I think, again, there's been so much pent-up demand here in the Austin area that investors and first-time home buyers, they're seeing that they can actually compete right now.
Yeah. Max.
Kind of the same thing that Romeo's seeing. We still have a lot of contracts coming in. We still have people getting pre-qualified. Seems like maybe it slowed up just a tad this week on some applications, but not much. People are still going under contract. Some people are backing out and nervous, but for the most part, it's just kind of still going. How that continues as we get deeper and deeper into this is yet to be seen. But right now it really hasn't slowed all that much.
Right, Ron.
Really the same. I mean, we've seen it. It's really very busy. Obviously, apps have slowed down a little bit from the purchase side, and the refi side has obviously taken off. Of last few weeks, but Really, I think what's going to happen, I think April's probably still going to be pretty productive, and March I think was record-breaking for probably most people on this call. It's really the unknown of March, June, July. How long are people going to be at home? How long are kids not going to go to school? And then the furloughs and the layoffs. I think that's what it's going to boil down to. We're a national company, so we're all over the country, and some states and cities have been hit harder than Texas and Houston, where I'm located. And so I think that's going to be the unknown is really what, is there's a fear factor there. And I agree with what Chris said earlier. We need to really communicate that and have them not as fearful and maybe show more benefits on why, as Romeo mentioned, why it's still okay to do it. It's a buyer's market or whatever the other reasons are. But I do think there's going to be a lot less people that qualify, a lot less products to offer. There's going to be some slippery slopes in the summer, in my opinion. And so I think it's still a good market today. There are people, like Max said, backing out, but it's a very small percentage right now. But I think there's going to be a lot less that qualify. And if the numbers come to fruition and it's 30% unemployment in a couple months from now, that's a pretty big number. And so I think you're going to see a very big slowdown in purchases, in the summer months. But again, I don't know for sure.
Chris, thank you.
Yeah, we're doing both commercial and residential, and so I've been monitoring both here. Just like Romeo said, in Austin, there's been pent-up demand. Houston has had very low inventory, and I think that's very, very good for us. I think this is going to affect us. We've seen probably a 20 to 30% slowdown in the number of showings, the number of properties going under contract in the last couple of weeks. I think it's going to be more over the course of April, but I think it's going to turn around very quickly in June and July. And the fourth quarter, I think, is going to be very strong because you're going to have all those people who decided to wait, coupled with coming back into the market, coupled with the people who are already going to be prepared in those times. So you're going to see a big surge in demand, though I believe it will be affected by, like what Ron said, the furloughs and the layoffs. I think you're going to see some legislative input there to continue to keep the housing market strong. On the commercial side, we've seen a lot of deals back out because that's basically investment, and people are holding off on doing things that they would have done before. We've had a bunch of retail and hospitality, hotel slowdown. I've had just personally 7 contracts back off in the retail and hotel market, about $30 million worth in the last 2 weeks that would have closed in April. So I believe you're going to see a major hit in retail and hospitality, but I think the federal government is providing some relief there with the CARES Act. So the slowdown is definitely happening, but not too much on the residential side.
Thank you. Eric, how many terminations or?
Very few. What we've seen is that the pipe continues to fill up, as everybody said. Applications are still coming in. Obviously, the refinance deals are much more voluminous right now, but people are still entering into contracts, and we're still receiving them in. The output is definitely where we've seen the slowdown. The pipeline is there, the hose is fat, and they're just coming out a little bit slower than they would typically. I think Romeo mentioned it earlier. Is that, just the lead time in escrow is expanded. There's just natural extensions being put into place, and people are much more willing and apt to sign off, understanding the circumstances. But things are continuing to press forward towards the closing table. That's all we continue to do. There's a lot of unknown, but yeah, we just keep pushing forward.
Thank you. All right. Obviously, there are a lot more virtual meetings. If you guys could also talk about how your technology needs have changed for your company and yourself since just a month ago with the pandemic. Ron?
Sorry, I was on mute. It hasn't changed a lot. We had, most of my underwriters across the country are remote, so they've already have a work from home kind of mentality. Obviously, 95% of our company is remote today and working from home. So you're getting a lot more of the Zoom calls, the Microsoft Teams. Romeo mentioned it earlier on before this. This is my third call as well this morning on some sort of Zoom or Microsoft Teams. So we're doing a lot more of that. We're trying to keep employees engaged, doing conference calls and webinars and things of that nature. So not a lot has changed. A lot of our guys are in and out and have remote possibilities, and the company has really the ability to do all of that. But there's definitely some engagement issues, right? We have a nice court at the corporate office, about 100 people that are not here, other than shippers maybe, and a handful of people. And so it's you lose some of that employee engagement. But other than that, from a tech perspective, really not a lot of tools have changed from our perspective.
Chris?
Yeah, I mean, I think Zoom is an awesome thing. We've seen, I've shifted all my classes for my agents to online. So matter of fact, at 1 o'clock this afternoon, I'm doing a class for my agents on Zoom. I've turned my home office into a classroom. I've got dry erase boards set up. I bought a vlogging kit, right? So the things that have changed are less commuting, more time spent in front of the computer, in front of people. We were talking before this started how it seems like we're working more than ever, and I agree. I've been sitting in this chair quite a bit. So communication, utilizing Facebook, LinkedIn, all the social media channels, and things like Zoom have really ramped up.
Eric?
Yeah, so for us as a title company, it's been a push into the modern age. We're an archaic business by nature. We still refer to things as faxing for this and faxing for that. And our people in general have always been heavily predicated on paper and hard files. That's just the nature of what title is. And so this has been an absolute fast forward into technology. And so from our perspective, we were well positioned for it by the software systems that we use here, and having transitioned to certain phone systems across the board for the company to be able to stay in touch with one another. So as we adhered to what the social distancing guidelines were from the government and wanted to maintain safety for our employees, there was a little bit of trepidation from sending people home and hoping that it was going to maintain a good continuity of business. But we've been really impressed with the way people have embraced it, and the technology is there and available. And so from our standpoint, we've been able to continue forward and continue to press. And like everybody said, I mean, every opportunity to get in front of your people is still available to you. The processing of files is a little bit different, and it just takes an adaptation period, but we've changed. And we're very thankful for the software system that we're on in Qualia, which allows for lots of our people to be in and out of files at the same time, whereas a lot of these other systems don't allow for that. Everything being housed safely and securely, but in a place where we can pull down whatever it may be very easily. So it's definitely made a difference and enabled us to be prepared for this, and we're really thankful for that.
Thank you. Max?
Yeah, kind of the same as Ron. A lot of our processors have been remote for forever, so that didn't really change. Underwriters are remote now, and the majority of my staff is all working from home. But between Teams and Outlook and email and all of that, it hasn't really changed much of anything. We did do our first loan officer meeting via Zoom yesterday, which was interesting. But other than that, that part of it is really just business as normal for us.
Yeah. Romeo, thank you.
So much of what Chris said. We had built last year. We had built these 3 large offices with training centers, each of the offices. And our company culture, we're a very collaborative culture. So that's been a hard transition because we're used to feeling the synergy and going into these offices. But we've transitioned all of our training virtually. And we've also adjusted some of our training now to show our agents how to market homes virtually, how to show homes virtually. You know, we've upped our marketing collateral that they can send out. So we've put a lot of focus in trying to work virtually with clients, understanding that obviously some clients still are going to require in-person interaction and those type of things. But, you know, we've taken the initiative of making sure that we're communicating with our agents pretty regularly. We host town halls a couple times a week because the situation is very fluid, right? There's new ordinances coming out. There's new things that are changing. So we want to make sure that our agents are up to date on everything that's happening, whether it's in lending, whether it's, you know, legislative, whether it's a MLS policy, whatever it might be. So we just have been over communicating, you know, more than ever, just to make sure that everybody has a thorough understanding of the world we live in, and at the same time documenting everything as well, and creating resource or online resources for all of our agents to go and be able to reference, not only for their own business, but in helping to educate their clients as well.
Great, thank you. Staffing. Have your staffing needs changed in the last month or so? Start with you, Eric.
No, they haven't. The influx of business from a refi perspective is there. We need all hands on deck. We are very happy and proud to be able to keep everybody well employed and busy. They're, like the guy said, you know, it's a little bit different with from our perspective with people being remote, but they're all really busy still. So again, very thankful for it, the opportunity to continue to do business, and with the rates where they are, the lenders are definitely pumping in applications, and so we're here to receive, and it's been able to work out.
I know I added somebody to my marketing team that started this Monday. Now, actually onboarding someone remotely is a little challenging, but we're making it work. So, Romeo, how about the staffing needs or at Realty Austin?
Sure. I mean, we still have the same staff. You know, everybody's had to adjust as well. So we have office managers. So obviously, right now their office is closed. We're not necessarily managing. So their role has shifted as well. You know, the good thing is that everybody is more than willing to adapt and shift in this environment. So everybody is staying busy. Of course, we're all working remotely and we're all interacting via Zoom like everybody else. But our staffing needs haven't changed. And if anything, you know, like everybody's mentioned, everybody's working more, because not only are you doing just the regular process, you're also having to innovate. So everybody has their innovation cap on and is trying to think of processes or things to move the organization forward.
Great. Chris?
Yeah, it's the same. It's not changing staffing as much as it is changing roles. And so it is, like Romeo said, you've got to not only do what you've done, you've got to innovate and find new ways of doing what you've done before. Somebody I've heard say several times, it's not business as usual, it's business as unusual, but it's still business. And so shifting those roles and fitting the fluid environment is key. And so we are communicating. We're doing a call every single morning at 9 with all of our agents and answering questions. We're doing it daily Q&A, and really learning how to shift the processes so that they get done in a timely manner while being not in the office has been an interesting experiment, to say the least.
Yeah. Well, I've been in title for 16 years and I have a family in real estate. My mom's been doing it for 30 some odd years. And I've always said the only thing constant in our business is change. And that's never more true than today, right? Ron, your staffing needs.
Same as the rest of the panel. I mean, there's been no change thus far. I mean, March and April have been bigger than ever, and we've kind of planned accordingly, and we're hoping for good summer months. So no change yet.
Okay, Max.
Yeah, same. We staffed up at the beginning of the year and added processors and underwriters, and shippers and closers, and we're don't see a need to change any of that. So we're good.
We're blessed in this industry, I think, right? A lot of people are being furloughed or laid off at this point. The real estate industry is weathering it pretty well. And I know the real estate industry is what was a big factor in pulling us out of what happened after 9/11. So within the business world. Let's see, this one is for Chris and Romeo. What is happening specifically with buyers? First and foremost, what percentage is no longer moving and or able to qualify? And then are some happy to have less competition for the listings? What are you doing as far as being able to, where you used to physically show homes? Romeo.
Okay. So like I mentioned earlier, buyers who are still in the market and able to buy are really finding that they're able to compete in this market right now because there are less buyers. I think those industries that have been hit hard, specifically like the service industries, those buyers are not on the market right now. Obviously, some other buyers who had to shift positions. There's a couple of months they have to wait as well to be able to have those paychecks to be able to qualify and so forth. So I think what's happening is a lot of the buying season is being shifted. And I think Chris mentioned earlier about expecting a big third and especially fourth quarter. And I think that's what's going to happen is a lot of this demand is going to get shifted. But there are still buyers out there because buyers who aren't at risk of losing their job, buyers who are already work remote, so it hasn't disrupted their way of living and their livelihood. So we're seeing a drop in the number of active buyers, but at the same time, we're still seeing a healthy number of transactions because, again, like I mentioned earlier, there was just been so much pent-up demand, and not just this year, but pent-up demand that's been building for several years.
Yeah. Chris, and let me ask you, Chris, I know before this hit, we were at, correct me if I'm wrong, Romeo, but I think we were at 1.5 months of inventory, and a balanced market is 6 months. So it was a pretty heavy seller's market. Chris, can you tell us where you were at in Houston and what's happening with the Houston market?
Yeah, we were at, before this all happened, we were at about a 2.4 months of inventory, which is still a heavy seller's market. And though we have seen some buyers decide to hold off, and really they haven't decided to hold off forever. They've decided to hold off until they see what it's like, a wait and see environment. I guarantee there's not going to be 6 months worth of inventory. This is not like 2008 when all of a sudden the capital markets froze and all of a sudden, the sky is falling. Everybody's like, oh gosh, what do we do? I'm checking out of the business, whatever. This is a temporary storm, right? This is something that is happening momentarily in a very strong economy. And so I think while we've seen a slowdown with the buyers, the inventory is going to stay pretty much in the seller market category. So I want all of our listeners who have logged on that are in the business to understand that this is momentary, and we have an underlying strong foundation in the housing market that is going to make it surge forth again. So stay tuned. That's all I got to say about that.
Great. And this one is also for Chris and Romeo, and I might be very similar, but listings. Are you seeing people comfortable with, how are you dealing with our listings? And have you had many fall off or be put on hold? And are people allowing others into their homes? I think in Austin, Romeo, there was a period of not being able to show homes, but now I think that opened up. Chris, I'm gonna start with you on this one.
Yeah, a couple days ago, Greg Abbott declared real estate, residential and commercial, explicitly an essential business across Texas. So it doesn't matter what your county says anymore. Texas now is open for business, and that starts today. I think that went into effect today. But how did we handle it? We we've been doing online virtual open houses. We've taught our agents how to utilize Facebook Live, how to utilize Zoom, how to utilize social media to do virtual open houses, as well as virtual showings. We also put in protocols for the safety of potential buyers and sellers that prevented sellers from withdrawing their listings off the market. We put hand sanitizers with the lock boxes. We put in protocols to say all showings, you need to show up in separate vehicles, and you can be accompanied and maintain 6-foot social distancing guidelines with those sellers that were concerned. So we responded accordingly, and now we've got protocols in place to make sure we mitigate the fallout from the big 4-letter word fear. So it's been working just fine.
Yeah, thank you. Romeo.
Yeah, a lot of the same practices as well. And at Realty also, I mean, we developed a whole process to everything for even the addendum that goes on the MLS. So when you're a potential buyer's agent, you're going to show a property. There are very specific requirements to be able to show this property. A lot of what Chris touched base on, but that is part of our showing instructions. And first and foremost, we're making it clear to our sellers that you do not have to allow physical showings if that is your prerogative. So we want to make sure that at no point does a seller feel pressured that we force them to expose their property to potential infected person. So, we make that very, very clear, but, we've instituted a lot of the same safety protocols that Chris mentioned, even down to having wipes in the house and having the wastebasket by the front door so that the showing agent could wipe down whatever has been touched. We're instructing our sellers to leave all interior doors open, lights on, instructing the buyer's agent to please do not touch the doorknobs or lights. So it's become very, very explicit in terms of the instructions. But again, a lot of the same things like Chris mentioned, we've trained our agents to be able to show homes virtually, both on Zoom, Facebook Live, whatever the format that they're comfortable with. And again, in those situations where there's requirement for interaction with the client, then observing all the CDC requirements and social distancing and making sure that nobody's sick and sanitizing.
Thank you. Max and Ron, this one's for you. Just a few short weeks ago, interest rates for a 30-year fixed rate hit an all-time low, then climbed quickly back up to the highest since early January. Can you address the fluctuations and what you anticipate in the coming months? Max.
So March was definitely a wild ride with rates. A lot of it started because mortgage backs dropped, rates dropped. There was this massive influx of refis, as everybody knows. It created clogs in investors' pipelines and their capacity to be able to deal with the massive amount of refis that were coming in. So you had a lot of investors, the majority of them actually backing off on rates and making rates worse to try to slow down business. Then obviously the virus hit and things started getting shut down. The Fed announced that they were going to, and I might be getting ahead with this, but it's all kind of related, but the Fed announced that they were dropping the Fed rate to 0. And that Sunday night, I had about 50 calls and text messages that mortgage rates have gone to 0, which created another influx. And that had to kind of be slowed down by the investors that are buying all these mortgages that we write. It's been interesting. A typical mortgage, a typical day for a loan officer, if you see mortgage backs trading anywhere 20 basis points, 25 basis points, that's a pretty big move in our world. This last 30 days, we've become accustomed to seeing moves of 50, 100, even 200 basis points a day. And so it's been somewhat challenging trying to navigate that. But at the end of the day, rates are still extremely low. It's still a good time for people to buy. It's still a good time for people to refinance. It's just rates aren't 0%, and they probably never will be. I do expect as things start to settle down, we'll probably see rates not be swinging half a point, sometimes 3/4 of a point, and over a couple of day period. I think we'll start to get back into a range at some point of your normal kind of quarter movement and rate over several days. But I do think that rates ultimately will continue to stay low, around the 4% mark or under for quite a while.
Thank you. Ron?
Yeah, really very similar response, obviously, to Max. He's right on point. Rates are still at historic lows, maybe not as low as 3 weeks ago or so when the spike really just went crazy. And obviously, the Fed has nothing, so to speak, to do with the mortgage rate. Although it's at zero, the mortgage rates aren't at zero, won't ever probably be at zero. It's kind of two different factors, and so I think people just need to be a little bit aware of that. Those are more for short-term rates that short-term that banks can borrow on, but it's not really mortgage rates. But yeah, I mean, I think there's been tons of ups and downs, tons of volatility in the market, tons of unknown. I do think kind of going into the long term, I think it is going to settle down. I think once the virus and the fears of the unknown settle down, I think rates are going to stay low for a long period of time. Again, maybe not as low as historic all-time record lows from 2 or 3 weeks ago, but definitely very, very low, and it's going to be a purchase market again, in my opinion, like some of the other guys said on this call, towards the fourth quarter. So,
follow-up question for both of you. What do you want to say to a realtor on how they can talk to their prospective buyers about these interest rates? And specifically in preparing for this, just this morning I was watching a podcast or a video cast from a real estate trainer that specifically said that rates would probably be going to zero. And so there's a lot of bad information out there. And so that 0% interest thing that is running around out there in the marketplace, how would you tell realtors and other people, other professionals in this industry, how to address that question with consumers or that comment? Ron?
I mean, I think it's pretty unrealistic, but I would love them to be at zero. I mean, if you think we're busy now, it'd be a real boom. But I don't think realistically that's the case. I think, again, like the very first, I believe the very first question you asked, and I think all five of us had a very similar answer, which is communication. I think giving them the wrong information is also not very good. So I think just being abreast of the situation, knowing that rates are at an all-time low today, you tell someone it's going to be at zero, that would keep somebody on the fence and hold even longer, in my opinion. So if you can get a high 2 or a low 3 today on a conventional loan, obviously Ginnie and government, financing is just not even in the marketplace today, realistically. And so, but on a conventional loan, you can get a very, very, very low rate, well under 4% today. That's unheard of rates. So I would tell them to move as fast as possible.
Max?
I'd say that when it comes to realtors or other people in the industry, as far as quoting rates go, really, really probably really should just stay away from doing that and refer them back to a loan officer. Rates are changing every day. And we have plenty of instances where you quote someone a rate in the morning, and in the afternoon, the market swung and that rate's either better or worse. But I think it can get a little bit dangerous to start quoting rates to customers in this environment, because you're starting to set expectations. And if the market moves, and it's moving quickly both ways, you can set that customer up for disappointment. So I really think that you just need to refer them back to the loan officer when it comes to what the actual rates are.
Thank you. Leads. Next question is on leads. Has your source of leads changed drastically, and has your focus on where you are putting your energy and efforts into new leads, are your energies and efforts changing in your marketing dollars? Start with you, Chris.
Yeah, we're shifting to new and creative ways. I mean, online lead generation is what we're talking about every single day with our agent population. If you're not generating leads, it's all about, I mean, this business is relationships. And so now we actually have the opportunity to connect more and to create new habits of relationship building on a daily basis, because we have this beautiful technology that we're talking about right now. I mean, for example, look how many participants we've got listening in right now. It would have taken us renting out a space, marketing, getting everybody to that space to fit 275 people to listen to what we're talking about, audio, visual, et cetera, et cetera, et cetera. But we're able to sit and connect with everybody and disseminate information in a much better, more efficient fashion. And so recognizing that and capitalizing on that ability to continue to nurture relationships and to serve people in the community, I think is unprecedented. And so I'm really, really happy to be able to share that kind of awareness and the tools with our agents to be able to connect with their sphere of influence, to be able to connect with people in geographic territories, to be able to connect with people by serving them in new and innovative ways. So lead generation is business as usual. That is our business. Our business is relationships, and lead generation needs to happen still every single day.
Sure.
And this technology is providing that ability.
Great. Romeo?
Yeah, I mean, we've always been a very online lead oriented company. So realistically, you know, we did see a dip a couple of weeks ago when the pandemic first hit, but actually now we're seeing a lot of online activity, a lot of new buyers searching our website, because I think a lot of people, first of all, you know, if they're at home and they're thinking of the future, I mean, they're looking at home. So one of the things that we really have doubled down on is all of our lead training classes and utilizing everything that we're developing, you know, whether it's Matterport tours, whether it's virtual tours, whether it's videos, Facebook Live, and how do you implement those new resources in your lead generation and your procurement of those leads, and basically being able to convert those leads as well. So I think, you know, our source has always been very heavy on online leads. Obviously, open houses is a thing of the past, so people aren't doing open houses, which in real estate, that's another lead source. But at the same time, you know, we're hosting virtual open houses, or we're hosting these virtual walkthroughs. So we are putting out there different aspects of how to generate these leads.
How do you put up a sign for a virtual open house?
Just, you know, at this point, you just use Instagram, use Facebook, you use all the social media, and that's been one of the key things, right? Is really leveraging all those social media channels for the procurement of business.
Thank you. Max, how about you all for your pipeline?
You know, from lead gen, it's kind of the same thing. It's like Chris said, it's lead gen every day. We're a purchase first mortgage company. We always focus on purchases. Refis are great, you know, but it's purchase by day and refi by night. So we're still focused on marketing the purchases, marketing to realtors, marketing to our past client database, offering the tools that we have and the maps and the collateral and things that people use to help generate more business for themselves. So that's really, for us, it's business as usual.
Thank you. Ron?
Yeah, same. Don't need to waste any time on this one. Same as everybody just mentioned on the call.
Thank you. Okay, Eric, I'm going to go to you now. The American Land Title Association, the Mortgage Bankers Association, and the National Association of Realtors and others have united in urging Congress to pass legislation authorizing the nationwide use of RON, Remote Online Notary. Some states have passed the legislation. However, the issue hasn't gained traction in all states. How does this affect your business operations? And prior to this outbreak, how was Ron utilized? And can you specifically talk about Ron with sellers and buyer closings?
Sure. So Ron is a fantastic tool, and it gives a lot of opportunity for closings to take place when they normally couldn't take place. However, it is only as good as and being able to be utilized as it is approved by the lenders that are working with it. So it's still a relatively disruptive technology that is yet to be adopted industry-wide, and it's not just focused solely on the title companies. Legislation that was passed in regards to the ability to witness and signatures by way of Zoom communication or really a secure communication through a VPN and transmitting documents back and forth. There are platforms now that have perfected that, and that is all being adopted, but it's being adopted slowly. Now this has fast forwarded that and really is starting to press the need and the efficacy of the whole thing. But it's a giant industry, and again, it's the golden rule. He who has the goal makes the rules, and that's the lenders. And so until it makes good sense and they are at a comfort level and they need to see that it works, that they will start to really enable the adoption of Ron as a industry standard. Right now, we're able to utilize it for cash deals. We're able to utilize it for certain lender transactions with caveats such as wet signing notes. But in Texas particularly, it has gotten to the point with legislation that all county recorders' offices will take the remote online notary verifications. But until they get to the point where electronic signatures are deemed as valuable, I guess on the secondary market when they're selling off, and this is a great question probably for Ron and Max, is until they get to that point, I don't think that the adoption will be there in droves. It's slowly starting to happen. Now, we continue to press and utilize it, and it is a great tool. It's not at the point just yet where it's as effective as signing face-to-face. It is slow because there are lots of requirements to ensure that the person that you're talking to has a secure connection, that they see the documentation, that they're able to understand the documentation. It's at the point, and it is a very neat tool, but it's at the point where these remote online notary platforms is you and I looking at each other face-to-face in a situation like this, a sidebar of all the documentation. You can literally see me drag my cursor over, grab a document, hand it to you, so to speak. You accept the document, review the document, sign off on the document, and then pass it back to me. So as you can imagine, it's still a bit cumbersome and still something that is plodding along. But as we continue to press forward, it is an opportunity and it is a great tool that will, I think, eventually be adopted. But again, that would be something to go back to the lender experts also on the panel to see where things are with that.
Great point. Let's start with you, Ron. You can give us the mortgage industry's perspective on Ron's.
Yeah, we're not, obviously really utilizing them yet, and primarily because the investors and aggregators aren't buying them. But I agree with Eric. It would be a fantastic tool. There's probably a little bit of risk, but I think this particular virus is going to move things quicker than they would have, especially something like Ron. And so I think there's a huge opportunity here, and I think it's going to help just expedite the process in getting us and having lenders and clients at the end of the day having the ability to do the remote, notaries.
Okay, Max?
Yeah, same thing. Ron pretty much said it. The aggregators and investors buying the loans is the problem. I agree. I think this is going to fast forward that and speed this up. And if there's something good that comes out of all of this, this really could be that and really help push forward the mortgage industry to get in line with that. We're working with our attorneys now to start preparing for it. Obviously, we can't accept it yet, but we're doing everything that we can and putting everything in place. So once it is an option and we can sell loans using that, we'll be ready to do it.
Great. Eric, can you address what could hinder a closing in regarding to like the county recording offices, e-recordings, tax entities, et cetera?
Sure, I think, and it's not fair just to put it on them. And I think that
Okay.
Chris and Romeo also spoke to it earlier. Is there are some of these other third service party providers that are out there. They're having more difficulties getting into properties, accessing things. So you've got surveyors that also play where they get backlogged, and need an opportunity to get out. So there are lots of independent players in a process, and it most certainly takes a village to close a deal, and in order to do that, everyone has to have access. So taxing entities being closed and not updating as quickly as they possibly could for adjustments on a property, that has been something that we've seen. The county recorders offices, that has been worked through. All the major counties except e-recording, and most counties now do too. So even with the reduction in staff, with social distancing guidelines, we are still able to get documents in. People are going then and uploading those documents on a more limited basis. So there's a little bit of a lag where it comes on the title industry, is that we pull where it would typically be a 5 to 7 day lag in from a document being recorded to it being shown really of record. It's a little bit further behind now, but the title companies, as the insurers, they still are providing that gap coverage, and so we're able to continue to press forward. It's a little bit different, and things take a little bit longer. So I think, as I mentioned in the beginning, and Romeo said as well, just the escrow time period is just a little bit longer, and it's just about setting really good expectations that these are some of the things that could arise that could potentially push back the closing, where typically it would have been a little bit faster, a little bit smoother. And our ability to disseminate that information to our customers and clients, that fixes the problem. It's just a matter of really having good communication and informing everyone of what is going on.
Thank you. All right, I'm going to give a few audience questions now. There's just a few. The first one, and you guys can raise your hand on who'd like to take it. What are your thoughts on the Airbnb market for those investors who have several properties not being used? Are there any predictions on an influx of these homes being put on the market and increasing inventory? Who's my volunteer to take that one?
Well, I'll take it. So I think, so obviously with the CARES Act too, if you're an investor, there are SBA loans. There's going to be a lot of legislation that's coming out, from an investment standpoint. So those, so I don't think necessarily investors are going to rush to list those properties. If they've been income producing for a while, then they're going to take advantage of whatever legislation is out there to basically get over this hump. Now, long-term, nobody knows the effects of travel and tourism and that industry. So there will be some that will look at their equity position on those investment properties and look at what the market's doing and decide whether it makes sense to sell. But I think, it's just, kind of like a stock market, right? I mean, the stock market goes up, it goes down. If you're holding these investment properties for the long term, then you can expect that there's going to be lean times and there's going to be times where business is good.
Thank you. All right, this one is regarding lending. Do we think there is going to be a credit crunch that's going to put the mortgage folks in a crunch due to the federal government flooding the market with money? Max.
So you've seen some of it. The non-QM market is pretty much completely gone. That's going to be your bank statements, your 1-year tax return on jumbo loans, asset depletion, a lot of that stuff. That's pretty much gone. You're seeing a lot of jumbo lenders also have problems get out because of the liquidity issues that are going on. There's still some that are around, not a lot. Government loans, FHA, VA, have started to become a little bit of problem on pricing and guideline changes pretty quickly. The conventional market, not so much. I mean, that's still, you know, it's still pretty much business as normal, with the exception of now verifying employment anywhere between the day of to 3 days prior to closing, getting some sort of verification from the HR department, or if you're self-employed, maybe the CPA, or something to prove that the shutdown, shelter in place, all of this hasn't affected your income, hasn't affected your employment. You haven't been furloughed, you haven't taken reduced hours, things like that. So, you know, there's definitely going to be a lot more last minute verifications going on because of this. You know, again, with the non-QM market going out, that's not a huge sector in the mortgage industry. So I don't think there's really cause for concern there. I think once the government starts putting out legislation and figuring out what they're going to do for the MSRs and helping Ginnie Mae and the FHA VA loans, I think that'll resolve itself relatively soon, so to speak. So yeah, I mean, that's.
Thank you. Ron, anything to add?
Very similar. I do think it's going to get worse before it gets better. I think, you know, there's just a lot of unknown, and these aggregators and investors are completely swollen with unbelievable record numbers. They you know, it's unsustainable. So they don't have to take specific loan types today, or low FICO, or, you know, some of the Ginnie products that aren't able to be priced, or non-QM, or jumbo is really, although available, it doesn't price aggressively like some of the other stuff we're seeing. So those things are really almost out of play now, and they don't need. I think the credit crunch question specifically, I think it opens when business slows down. I think that's when things start to open, because investors and aggregators want more loans, and they need to buy more loans, and they need to find a way to get a little more. And so I think it's going to get worse before it gets better. And I think, you know, the VOE, the verbal VOEs, you know, before the closing is going to become a major concern in a few months if the layoffs and furloughs continue at the pace that they're going. I think this morning I saw like 6.6 million this week, it's about 10 million in the last, you know, little while. And so these numbers are just unbelievable. And it's obviously saddening. At the same time, it's going to take a lot of people out of play for purchasing or refining or any of that, just from a qualification standpoint. So I do think it's going to get worse before it gets better, but I do think it's going to come back around.
Thank you. Well, we're at time. I want to thank all of you for being here. There were a few more questions, but to the audience, we will get this transcript out, and we will try to get the rest of those questions answered. Many of them have been addressed in some way or another. I invite all of you to please connect with my expert panelists here through their social media. We at Patten will be hosting more town halls to bring together experts and thought leaders. And what we do is bring together people in the industry. We bring together all the groups for the closing to facilitate that. So we are going to continue to bring you together so we all can succeed as best possible. And as real estate professionals, we are the foot soldiers on the ground that help to get our industry and our society through what otherwise is a very scary time. So please stay safe, stay positive, and inform the public of the positive signs that we see for the real estate industry. Thank you very much. Thank you, gentlemen.
Thank you.
Thanks, Phil.